Hello, today is Sunday the 27th of May 2012. This will be a somewhat quick video looking at silver and the Dow Jones Industrial, both short-term and long-term. We'll start off within the daily time frame on the silver market. And now we've seen 5 of the last 6 sessions manage to come up towards this declining front-weighted 18 average of closing prices. Meanwhile, since it established this first high, it's looking as if it might establish a higher low. And the reason I say might is as long as it gets above this level or even stays above around here, it'll be a higher low. However, let's just assume that tonight the market breaks down, or on Monday and it goes down like that. Well, that low will be changed within this one in here. I'm going to have to say the same thing I've been saying for a while. Watch out for this 30 level to be resistance, as it is a significant Fibonacci level. Let's now move this on to the weekly chart. And what I was stating on Thursday was that we have 2 consecutive candles that are in that of reverse hammer formation, or at least a bullish hammer formation, where the closes are pretty much where in the area where it opened. Now this one has a little bit of a higher low than the previous one, but just because I haven't seen it doesn't mean I don't know what it is, because I do. When you see 2 of these, that's a double bottom, and a double bottom is where you go down, back up, back down, and back up. Really a reverse 2 V's or 2 U's, however you want to look at it. And when you see it in this, it has the same time frame of point A to point B that it does from point B to point C. If you see it with a higher low like you do in here, then that might be more of a cup and handle formation, which is pretty much what we've seen on the daily chart. Therefore, if this thing doesn't get going too much or really breaks above 28.5, 29, and it manages to test 26, then that's a scary situation for having a bullish outcome, not give it what it's really supposed to do, and that's higher gains. I'm going to zoom in on this just a little bit. And for price objectives, what you can do is you can match the length of the pattern, which we'll do right now. I'm going to get a box formation instead. Match the length of the pattern, which would give us a price objective, and it's just a simple way of doing it, but that would be up towards about 31.80 or so as a objective of price. Now I'm going to take a look at silver on the yearly time frame, which means 100 years of data, and a lot of it is just freehand drawing, well, the earlier parts anyway. So this is going back to when the Federal Reserve started its cartel and starting the fiat empire as we know today. You have this downtrend that occurred, or a situation where it actually had a significant correction, something we're not going to see on the Dow Jones when we look at this, the Dow Jones on its longer term chart. But when it fell down in 1933, that's when they decided to really make gold illegal, literally, by confiscating people's gold. And by doing so, they reduced the prices as far as they could, bringing silver down to a quarter, and the price of gold down, I think, below 20, or around 20 or so. They've crushed it pretty big. And then as they made it illegal, the prices for both gold and silver just shot up. And I had an interesting comment earlier this last week stating that, well, based on money supply, silver should be somewhere around here, around, let's say, 12, 13 per ounce. And within the 1930s, 40s, we can make a safe assumption that maybe around 70 cents or so was its average, which would mean that the price should go up a little under 20 times. Let's take a look at the Dow Jones on its long-term chart now. And this is a 209-day chart, which means each one of these candles represents 209 days of trading. There's roughly 250 in a year. So about 80, 90 years worth of data. An average movement for the Dow back then would have been about 140. So if we times that by 20, then that would be under 2,800. Yeah, I don't think silver should be 13 or 14 anyway. That's my view on the issue. This is like I say, the long term. You have, since the major bear market, which we haven't seen anything such since, uptrend, sideways, uptrend, sideways. Plain and simple. Now let's take a look at Dow on the daily chart now. And I stated in silver that I haven't seen a situation where, well, on silver it looks something like this, like the two formations, either bullish or bearish. But here's the spot where you do, because this is a double top. Point A, point B, point C, point D, and then back again. You need to rally to somewhere, come back to a level from where you were, rally close to the same area that you were, and then retest that same level you tested before, which is the case in here where we calculate this and then this again. It's a downward trend, or it's a downward pattern to say the least. Now if we take a look at this in a candlestick formation, I can start it here and pretty much end it here, and then the next period just show what it looks like ending here, and I've done just that. So let's take a look at the Dow Jones on a 22-day chart, each candle representing 22 days worth of data. And there we have it. This is what two consecutive reverse candles would have looked like on May the 14th, 2012, with a couple days left on this 22-day chart at that time. Obviously, it's went down just a little bit more. And one of the key things that I've been saying about this pretty much since back in here is that we are guaranteed to have a failed move. Which one, I don't know, and whether a fast move is going to occur afterwards, again, I don't know. The failed move is either going to be this breakdown. And Fibonacci analysis states from your high and your low, if you can break above, hold, and stay above 61.8%, then the move that preceded was a failure. Well, this is 61.8%. At this point here, it was just resistance. Okay, falling down? Nope. Roughly around here is where it was stating, okay, we're holding up well, and we've had a retracement close down this level and back up here. That's enough confirmation for me to state that we're going back to 14,000. Doesn't necessarily mean that we will. But if that's not the case, then that means this rally would be a failed move. And then, of course, that would proceed to downside action. I'm going to zoom in on this again like I did with the silver chart on the weekly time frame, and do the same thing again as far as price objectives is concerned. And that's to draw a little box in here, move it from the breakdown point, which would give us a price objective pretty much around 12,000 or so, maybe high 11.9s as a price objective for the double top formation. Also, that's a significant area. About 12,100 is a significant Fibonacci level from here to here. If you calculate this high and this low, I think what I calculated earlier was like 12,100 as a possible area. So thank you for tuning in, and take care.